I'll just.
We are live.
Oh, okay.
Good evening, everyone. Good evening, everyone. Thank you so much for joining us today. Please kindly comment where you are streaming from in the comments below. Comment where you are streaming from. Comment your name and where you are streaming from. My name is Emmanuel Jacob. I'm streaming from Ekate, Akwa Ibom State. So I'd like you to comment where you are streaming from in the comments below, and do well to share this live stream with your family and friends. Invite as many as possible to join today's live stream, as we are going to be sharing some helpful strategies you are going to be using in trading and investing in cryptocurrencies to remain profitable. So kindly comment where you are streaming from, and do well to share the live stream with your family and friends. Comment where you are streaming from, comment where you are streaming from, and share the live stream with your family and friends. Comment where you are streaming from, comment where you are streaming from. So in a few minutes time, I'm going to bring in our guest speaker. His name is Hilary, and he's going to be taking us on developing a profitable trading strategy for cryptocurrencies. That is quite an amazing strategy, and he's not just a newbie. I don't know how to put it, but he's actually an experienced cryptocurrency trader who has been in the crypto space for about 4 years now. So he's not coming to tell you what he read on Google or maybe something he read from a book. He wants to share his experience, how he has been strategizing in order to remain profitable in the crypto market. And we all know that the crypto market is quite a volatile market. So for you to be able to stay afloat the volatility, you have to have some strategies to help you remain profitable. So kindly comment where you are streaming from in the comments below, as we are about to start. All right, so Mr. Hilary, can you hear me? Can you hear me? Um, I think your microphone has been muted. Just unmute yourself. Unmute
Okay.
yourself.
Can you hear me clearly?
Yeah, sure, I can. All right, so I'd like you to do a brief introduction of yourself to the audience. So we want to know you.
Okay. So I'm Hilary Azubuike, and I founded the blockchain event and the Cryptohills community for blockchain. And so, can you hear me clearly?
It's clear, but at some point it's breaking.
I need to confirm that I'm not talking to myself.
I can hear you. Can you hear me? Just go ahead. I can hear you. If you can hear me, just go ahead. Damn, I think network is really messing up. Network is not helping matters. All right, so while we are waiting for him to be able to sort the network problem, I want you, if you are yet, to tell us where you are streaming from in the comments below. Please kindly do that now. Comment where you are streaming from. Let us know where you are streaming from. Let us know where you are streaming from, right? Let us know where you are streaming from. And secondly, I like to implore you to get writing materials, get your pen, get your paper, get your notepad, and write down some strategies that is going to help you to remain profitable in the crypto industry. So make sure you take this very seriously, because you cannot just navigate through the crypto markets without having a good strategy, right? And for you to be able to come up with this strategy, you need to learn from the experts, right? And you also need to maybe learn from your own experience. And learning from your experience can most of the time be very expensive, as you may get to lose a whole lot of money in the process. That is why you need someone who has been in the space for quite a long time, that would tell you, okay, this is how to do this and this is how to do that. I think he's back. Sorry for the network issues. Can you hear me?
Yeah, I can hear you. Can you hear me now?
Sure, sure. You can continue.
Okay, good. Okay, great. So, by way of introduction, Hilary Azubuike, and I'm a business developer and I'm a crypto enthusiast. I founded the blockchain event and the Cryptohills community, basically Cryptohills Academy, with the aim to expose people to opportunities in the crypto space, opposing them to blockchain related opportunities for their economic advantage. So we held a couple of events for this shared purpose. So I'm here to share my knowledge about the topic trading, how we can best maximize it for our own benefits, leveraging on latest technologies and best strategies.
All right. Thank you so much. Thank you so much for that brief introduction. And I want to appreciate you for honoring our invitation. Thank you for choosing to be our speaker today. We really do appreciate that. So, I don't know if you are still with me. Network is really. Can you hear me? Hello, can you hear me? Please, yes, if you can hear me, unmute
Yeah,
yourself.
I can hear you.
Okay. So, talking about today's topic, which is how we can um, have a particular strategy that would help us to remain profitable trading and investing in cryptocurrencies. So, what can you talk about this? How can we develop a profitable trading strategy for trading and investing in cryptocurrencies? Network. Network is messy. Network is very messy. So sorry guys. Our guest speaker is having a serious network issues, and let's just hope that over time the whole stuff is going to be corrected. So like I said earlier, if you are yet to share this live stream, please do well to share the live stream with your family and friends. And I don't think we've had anybody comment where he or she is streaming from. Please do well to do that now. Comment where you are streaming from in the comments below. Comment where you are streaming from in the comments below. Let us know where you are streaming from. So okay, speaker is back. And so, sir, was someone trying to call you? Can you hear me?
Yes, I can hear you. I guess I'm able to fix the network glitch now. Hope it's better.
Okay, that's great. That's great. So, I was asking you, how can we
Okay.
be able to develop? How can we be able to develop a good strategy that is going to help us remain profitable in a volatile market like the cryptocurrency market?
Okay, I'm talking about trading strategies and developing profitable trading strategies, basically for the newbies that are here, probably during this session or later, probably listen to the recording. So first of all, you have to understand what crypto trading is, right? In crypto trading, you are leveraging on the price movements of a particular asset, the volatility, right? You are buying, either you're buying low, selling high, or you're selling low, you're buying whatever it is, or you're trying to exploit the differences in of a particular asset in different markets. In that case, arbitrage trading, whether it is sport, whether it is futures, there are several kinds of trading. But what the profit comes from the price movements, right? Leveraging on the differences in price, or leveraging on a price moving from a particular an asset moving from a particular price to another, whether it's appreciating or depreciating. So for some people, they could be losing, while for the others, they are gaining, right? So that's therefore what we could look to be like a disadvantage for a crypto asset being volatile. It becomes an advantage to the trader who understands how to maximize the price movements. So for me, developing strategies, so strategies will now become activities, actions, or the way you carry out your trading activities for the purpose of making profits, right? So from I'll probably list some of the trading strategies or some of the useful things I think are pretty much relevant for anyone willing or wishing to become profitable in the market. One of them is as regards profitable trading strategies would be understanding how to maximize profit and then minimize loss, right? By maximizing profit here, I mean looking at ways to that's where you look at your position size, look at your margin size, so you not be too exposed to the markets, trading with the amount of money that you cannot afford to lose. So for me now, I'll list it as one. Trading strategies, you start with your what do you call it, your technical analysis, right? By technical analysis, I mean leveraging on crypto trading tools, things like trading view. You play with the indicators, your support lines, you draw your resistance lines, right? You get your volume, the MACD, the RSI, and all those things. That's where you now want to take it really technical. But then the point here is that your technical analysis has to be sharp, right? And it has to be something that you keep updating your trading methods so you become more profitable. You keep learning from the market. Then the second strategy to trading or approach to trading with fundamental analysis. Unlike technical analysis that focuses on, like it sounds technical, right? You're looking at your support and resistance lines, your demand zones, and all that. For That's when you look at the charts. You're looking at the chart, looking at the previous record, the previous data of that particular price, and predicting what the future price could be. But then for fundamental analysis, you're looking at things like the token, and looking at geographical factors, looking at things like news. For example, a few weeks ago, you saw Dogecoin pumping simply because Elon Musk changed Twitter logo to Dogecoin logo. Things like news, you hear the Ukraine government is fighting the Russian government, you hear this and that. All those are basic fundamental analysis. You're looking at the roadmap of the project, right? Let's say you're trading XRP or you're trading Bitcoin or whatever you're trading. You look at what is happening to that in that particular space, right? That's basic fundamentals, which is also another profitable trading strategy. And then I'll probably touch two more since I know there are other questions that are going to be asked. Then you have I've talked about volatility, talked about fundamental analysis, talked about technical analysis. There's even what we call liquidity. That in this case now, we are looking at liquidity and the role it also plays in making your analysis. You don't want to buy a token or a coin that you'll not be able to sell off, right? So, and then you now come about risk management strategies, things that will help you continue to stay profitable. So I think probably as we go, as we continue this conversation, then we can now be able to talk more about risk strategies and even trading psychology, which involves understanding how to deal with your emotions. You get things like your risk to reward ratio. That's when you talk about risk management. Talk about things like your win loss ratio. You talk about things like not trading with more than you can afford to lose. You cannot have $100 portfolio and you're trading with the entire $100. That's not right. And then let's say your the entire portfolio is, let's say, $1,000, and you definitely know that trading with $1,000 is not going to be, it's taking a lot of risk, right? And then next thing you'll be trading with it. No, probably it's better you actually trade with, let's say, a percentage of it, maybe 10% or 5%, depending on the market you're also trading. So there's a lot to becoming a profitable trader. You also have things like, and that strategy will also be having a trading partner. Yeah, this is also another strategy that is downplayed by a couple of traders, right? There are certain things, but probably if I'm analyzing the chart, for example, there are certain things I may not see. Maybe the 12-hour time frame might be showing me something else, but my trading partner may have gone to the 3 days time frame, or probably has gone to the 1 hour time frame, and he's seeing something different, maybe a different candlestick pattern. There are several chart patterns, and then he is seeing that, me, I'm seeing something else. Our ability to now come together and now make a decision that will be, maybe not 100% accurate, but to be actually more profitable. So you'll be able to know how best to position yourself for your risk and also for the reward. So for me, strategies to trading, they basically a couple of them, and most of these things are also things you learn as you trade. You keep an open mind and you keep learning every day.
All right, thank you so much for that. And please, for the viewers out there, kindly make sure that you are taking down some notes, because we are going to give room for questions, and we would gladly give answer to your questions. So take down some notes and make sure you ask question when time is given for that. So so I want to ask, how does the market analysis for spot trading differ from that of futures? Sorry, you've muted yourself.
Okay. Like I mentioned before now, there are several kinds of trading. I'm trying to simplify these things to even the newbies so that they will get to understand what I'm saying. And that's why I'm also trying to use, but if I probably use a big technology that is not familiar to them, I'll try to break it down. So talking about trading itself, I can explain what trading is. Now there are several kinds of trading. There's the spot trading, there's the futures trading, there's the arbitrage trading, you have the P2C, you have the OTC. All these are several kinds of trading, right? So within this context, trying to create a discrepancy between spot trades and futures trade. Now for spot trade, let's say I have $100, because if you understand the difference between spot trading and futures trading, then the question of the analysis part to it becomes answered, right? So for sports trading, you have $100, for example, and an asset, let's say, the name of the token is Cryptohills. One of Cryptohills is $10, right? If one of Cryptohills is $10, and I have $100 on the comment section, how many Cryptohills token can I buy? Let me take it again. I have $100 as my total amount of money I want to use to buy Cryptohills token. One Cryptohills token is $10. With my $100, how many Cryptohills token can I buy? In the comment section, let it be a roll of answers. Great, the answer is 10. So now that's basically what spot trading is about. So I'm buying 10 tokens at $10 each with my $100, right? And then let's say after a number of hours or days, it grows from the price of one crypto token valued at $10 and it grows to $15. Or let's say it grows to $20, right? That it grows by 100% or 50%. What happens is my $100 will now amount to $150 or $200, depending on whether it grows by 50% or by 100%. So in the simple definition here will now be that spot trading is when you buy low and you sell high. You're buying a crypto asset at a low price, hoping to sell that asset at a higher price. That is futures trading. Now, that's spot trading. Now, unlike spot trading, futures trading gives you the opportunity to not just make money when the asset appreciates in value. What I'm trying to say here is simple. For spot trading, the only way you can make money in a spot trade is you buy a token at $10 and it increases in value, let's say 11, 12, 13, 14, and so on. You are buying at a lower price, hoping to sell at a higher price. That's spot. On futures, you're not only limited to making money by buying low and selling high. You can also make money when the token is depreciating in value, provided you predicted or your entry is, you call it shorting the trade, right? Where let's say, for example, Cryptohills token is $10 and after some hours it goes to $9, it goes to $8. As it's depreciating in value, you can make a lot of money depending on if that asset, for example, Cryptohills token, is listed on the futures market. Now, if it is listed on the futures market, and you enter a short position, like for example, people right now are making a whole lot of money as Bitcoin is depreciating in value because they've entered a short position at $30,000 range. So as BTC is trading within the range of $27,000 to $28,000 at the moment, they are making a lot of money by shorting it at 30K. So you can see that you can make money both ways, whether the asset is increasing or whether the asset is decreasing if it is on the futures market. So therefore, that will now be the basis for now creating a disparity between the analysis, the approach to the analysis, right? So you have things like let's look at liquidity, for example, or let's look at volume, for example. The price in a spot market is determined by the forces of demand and supply. When you talk about the spot market, if you have more people buying than more people selling, the price will begin to appreciate in value on the spot market. So that price is the determinant or is contingent on demand and supply. But then on the futures market, it is determined by contracts. Now, let me also give another example. I think examples are best ways to explain certain things like this. Let's say I have $100. I'm still using $100 as the base value so that for consistency. Let's say I have $100 and I want to trade Cryptohills token worth $1,000. Let me take it again. One Cryptohills token is currently worth $1,000, but I only have $100. Can I be able to buy one full crypto use token? No, but on the spot market anyway. But then on the futures market, I can be able to buy as much crypto use token that I can buy just because I have $100. How does that work? Now, in the futures market, there's what we call leverage. Leverage, not like you're borrowing from the market. Now, by leverage, I mean if I have $100, for example, and I use the leverage 5x, I'll be able to trade with a volume of $500 because $100 times 5x is 500. Same way if I use 10x, I'll be able to trade with a volume of $1,000, meaning my $100 that I have in my balance with a 10x leverage gives you a $1,000 trading margin. Now, with that margin size of $1,000, I can be able to buy one crypto use token, right? But now, this is the thing. It simply means as crypto use token moves by 10%, let's say it goes by from $10 to $1.1, or let's say if it's 10%, let's say it's valued at $1,000, and then it moves 10%, that becomes $1,100. If I buy one crypto use token with $1,000, valued at $1,000 per crypto use token, I'll be having $100 profit on a 10% increase. But then if I'm trading that with the same amount and a 10x leverage on the futures market, I'll be having far profit than the $100. But now here's the downside to it. As you are opportune to make more money on the futures market, you can enter a trade in less than 30 minutes, you're already making 200% profits. Pretty much possible on the futures market, right? It's also exposes you, the risk management for futures trading is higher, or the risks associated with futures trading is higher than the risk associated with spot trading because of higher volatility in the futures market. So for me, that would be one or two or three among other differences in the analysis methods. And then for futures trading, you're also looking at your what do you call it, your technical analysis approach has to be very sharp. Again, you have things like sniper entries, you have things, whether you're scalping, or whether you are, whether you're doing your day trading, whatever kind of trading method it is, you have to pay much more attention to risk management strategies if you are trading the futures market. That's why it's not open to any kind of trader. It's something you learn from consistent, and then based on consistency, you try and keep trying. But then you start small. That's why I usually advise starting with a demo account.
All right, thank you so much for that. I believe if you are watching this, you are taking some notes, because these are some vital information that is going to help you remain profitable in the crypto market. So thank you so much, sir, for that. So the next question is, can you share with us some of your successful trading strategies? That is, those strategies you've been using and it has been really helpful for you and has been helping you to make massive profits, possibly.
Okay, so I've been able to explain some of the, for those who have been listening, I've been able to highlight a couple of strategies. Most especially, I talk more about risk management because I've seen some people who started with, for example, let's say $5,000 trading portfolio. They are 1 month of trading, they grew their $5,000 to $10,000. Sweet 2x, right? In 2 months of trading, they grew their $10,000 to $20,000 or $25,000 because it is the bullish market, right? And then on the 4th month, what happens? they blow the entire account. Why? Risk management. So risk management just simply means strategies or ways in which the trader intentionally minimize risk and maximize profits. Minimize, I mean, I'm talking about minimizing loss, things you do to minimize loss and then maximize profit. That's basically the aim of trading. So then in my opinion, I think a trader should also be much more interested in protecting capital. So I'll summarize the reason for trading in two categories. First is to protect capital. By capital, I mean your portfolio. You protect capital. And then the second one will now be to make profit. Because if you are so much all about making profit, you start with $100, you made profit to $120, and then you made a wrong trade, it goes to $80. You want to keep trading because you want to make profit, and then you'll not be strategic about the trades. Your $90 will go to 80, go to 70, and that's how it's going to vanish. Whether you're in the futures market, you'll be liquidated. Whether you're on sports, without the right risk management strategy, you can lose what you have. Whether you are trading the gens or you are trading a DeFi token not listed on a centralized exchange, whatever it is, you lose if you don't really understand some of these things I mentioned. Now let me give an example of RICS RRR for risk to reward ratio. Let's say I'm entering a trade with $10. Let me use $10 for example. And the price of let me say $100. Let me use $100. I'm entering a trade with $100, and the price of the asset is $10. If I look at my chart, and my chart is telling me from this $10, this asset will hit $16. From $10, this asset at the price of one of the assets is $10. I'm looking at it, it's going to hit $16. I mean, what happens? It's going to grow from 10 to 16. That means there'll be an additional of $6, meaning it's going to rise by 60%. That is the reward. Then the next thing I'll look at is, what if a trader must always identify his entry and his exit point? A good trader should be able to know your entry and your exit. Knowing when to exit is as important as knowing when to enter the trade. I've seen a couple of people who are just interested in entering the trade, just want to trade, enter trade, whatever it is. But the exit is as important as the entry. So now I look at it. What if this asset doesn't get to $16? What if it doesn't get to that resistance point of 16? Rather, it even goes below my entry. And I look at what is the risk. Remember, the reward is 60% from $10 to $16. Now, the next thing is, what is the risk involved? I'll identify my support zones. If I look at that, at CMP, like I said, CMP means current market price is $10. If I look at the support, and the support is telling me $9, for example, I'll place my stop loss at maybe 8.99 or 8.95 or whatever it is, somewhere just slightly below that support line. Now, this is why. It means that if I'm trading with $100 and I buy 10 of the tokens, it hits my target, I'll make $60 profit. So I've turned my $100 to $60 for a 60% increase, the reward. But then I'm willing to lose. Before you enter a trade, you must be willing to lose a certain amount. How much am I willing to lose? 10%. What is that 10% of my $100? It's $100. When the price of the token goes from my CMP of $10 to $9, losing 10%. That is a good trade. Meaning I'm willing to lose 6 to gain. Sorry, I'm willing to gain 6 to win 1. So the summary of the whole thing is your risk to reward ratio has to be strong and profitable. It simply means that in a let's say there are 3 trades. Now that's when you talk about win-loss ratio. If there are 3 trades and I lose 2, if I lose 2, how much am I losing? 20% at the same margin size, for example. And then if I gain 1 out of 3 trades, that's 6. So I'm losing 20% in 2 trades combined, and I'm gaining 60% in 1 trade. So 1 trade can cover up for my loss in even up to 4 trades that I made a loss. What is that? Keeping your margin side constant. That's the ceteris paribus. So what I'm trying to say is the approach to trading also differs, right? Talking about able to explain risk management, then trading psychology, not allow your emotions change how be in control of your emotions. The market, we are all students of the market, so you don't pray. I've seen someone who, even myself, starting the trading game, after entering the trade and it's going, I'm losing like 40%, 50%, 60%. I'll start praying. I start praying, begging God to come and change the price of the asset. I actually did that at several.
God no send you.
I did that at several occasions, but God don't send anybody. If it's that one, I'll pray to God to turn Bitcoin to $1 million. but that just it. So it simply means that you have to be in control of your emotions. You get, God is not even moved by all of these emotions and all that. If it's by that one, then let's not even talk about it. So the summary here would just be things that have helped me stay profitable. 1, having a trading partner, being in a community, a trading community, your TA, your FA. There are several tools, things like coin market cap, right? Let me even tell you another one again, Nomics. Nomics.com tells you, okay, probably we'll talk about technology, leveraging on technologies to also make certain decisions. I'll probably stop here because of time.
All right, thank you so much for that. So yes, the next question is, what role does technology play in profitable crypto trading, and how do you leverage in its trading activities?
Okay, I will not spend so much time answering it because it's a straightforward question. Technology has helped in so many ways. As humans continue to live, we'll continue to look for better ways of doing things, right? Evolution began, time passed, years ago, thousands of years ago. Look at the social media, look at the communication industry, for example, or the media, whatever it is. For now, to disseminate information, you probably use town criers or use birds or use post office and all that. But right now, we're using WhatsApp, we're using Messenger, we're using Facebook, and all these Web2 products, right? And then, like as the internet, even the internet, as the internet has revolutionized the media industry, right? And social media, internet, and all that has basically just simply tells you that humans are looking for better ways of doing things. Not just, even money itself has evolved from trade by barter system, to metals, commodities, and right now we're dealing with digital currencies whereby you can send, huge bulk of money so fast, even with less fees, right? And even it is borderless. Talk about crypto trading. So it is evolving. Before now, when actually started trading, the exchanges that we used back then, let's look at the other types, for example. Since we're talking about trading, other types or other books, whatever, you're looking at let's give you an example. We have the market order. Example, it just tells you how to enter a market or exit the market. Market order executes the market, whether you're buying an asset or you're selling at the best available price. For limit order, you place a price to buy or a price to sell at, it executes at the price you want it to execute. That's the limit order. You have the OCO, you have the stop limit and all that. For OCO, you're able to set your trigger, you're able to set your stop loss, and you're able to set your take profit. So in OCO, I can, after buying at $10, for example, and I want to sell with OCO, I'll place my take profit at $16, stop loss at $9 or somewhere a little bit below $9. And then I set my trigger. So I'm able to set stop loss and trigger. And stop loss and take profits with my OCO. But back then, exchanges don't have that feature. So it simply means you are able to either sell off or buy. When you want to sell, you get to the price you want to sell, you go and sell. You get to the price you want to buy, you go and buy. Okay, so things are evolving. Now you have tools like the DeFi space, you're having automated market makers who are making things pretty easier and decentralized. You get, you're looking at automated systems. You can leave, place order, you have bots, they can make trades. For all this technology, based on technological advancement. You also have things like technical analysis tools. For example, TradingView. When did TradingView even come out? It came out, lines of codes, and all that. To be telling you, technology is changing a lot. I gave you an example of another website. You have coinmarketcap.com that aggregates the prices of assets, thousands of assets, talks about the market history, talk about exchanges where the assets are listed, talk about the contract address. It just tells you the entire profile of even the community of an asset. That's technology. You're looking at nomics with AI. Now we have machine learning, AI, some AI platforms or whatever that predicts the price of assets. It cannot be accurate, but it can help the trader manage his risk and exposure, to adverse conditions that could come out of the market price volatility. So example nomics, for you can be able to see 7 days prediction of an asset. And then through that, you can now be able to make your decisions. It helps you make much more profitable decisions. It uses AI to also predict the price of certain data using the previous data, price of certain assets, using the previous data to make the analysis. So right now, you also have crypto trading exchanges. Yeah, you have centralized exchanges, you have decentralized exchanges, and all these are basically applications that came out as a result of technology. So technology is changing a lot based on humans' ability to to innovate, right? And you also have basically there are just a lot of what they call it now, technological effects on trading patterns. You even have mobile trading, for example. By mobility, I mean you can be walking on the road, you can be in your boat, you can just finish taking a test wherever you are, just with your phone. You're trading. That's technology. You don't necessarily have to be immobile by just staying in one place. You can only trade in your house or at a particular confined space. So technology is basically changing a lot. And you also have, talking about the DeFi ecosystem as well, or whatever. You're looking at DeFi Llama as an example, telling you the total value locked of an asset. You can use all these all these are lines of codes that extract this data and present it in readable form for us to help us make better trading decisions.
All right, thank you so much. And I think we have one question. Someone is asking, is it nomics, NUM? Have you seen the question?
NOMICS, nomics.com.
MONO
NONC.
ICS, ba?
Yeah. Yeah, just replace the U for O.
Okay.
Yeah, nomics.com.
All right. Okay, that was quite elaborate. That was quite elaborate and very concise. So, guys, if you have any question, we are almost coming to the end of today's session. If you have any question, please do well to drop it in the comment below. And from me, this is the last question. What can you say about trading bots? Because personally, I've never made use of trading bots, and I kind of not really believe on it. Actually, I've never made use of it. So what is your take in trading bots?
Okay, personally, I'm also not a fan of trading bots because of the risk associated with trading bots. Things like you can have most of the bots I've actually seen, they would build a reputable name over a period of time, and afterward they begin to take user funds, they close up and all that. So for me, trading bots should not be used by newbies, right? And if you want, let's say for myself, I want to use trading bots, I need to have a separate account for that particular bot because they have access to certain data, and you don't know how this bot are actually been built, the lines of code and the agreement you are clicking. But when you make these clicks, there are a lot of hidden things. Because most times we don't read all of these T and C's, terms and conditions. You get. So for me, bots should be used by experts who understand the risks involved. For me, um, I'm not a fan of bots, except you understand the kind of bots. So let's say, for example, they're selling bots like, let's say, arbitrage bots. You know what arbitrage? Okay, I've talked about sport, I've talked about features. Arbitrage is simply leveraging on the differences in price of an asset in two different markets. I'm buying an asset, crypto is token at $10.1, trading on X exchange. I'm selling it at $10.3, trading at Y exchange. That's same token, different price, different market. That's basically what arbitrage is. So there are certain apps on Play Store that also spot this, and it's usually based on market irregularities, right? And it is short term. So there's a lot you look out for when you are trading arbitrage. So there are certain apps, that's where technology also comes in, that will show you these differences in price that you can exploit. And that's where bots also come in. So that's why trading bots, for me, is not an entirely, like Aladdin's cave or a golden mine or whatever. For me, I would prefer, before you trade with that kind of bots, look at people who have been successful with it, and then you can be able to trade with it. There are several kind of bots anyway, so I'm talking generally. There are also some bots that help you copy trades, right? Let's say there's a particular expert trader with a particular profile with a decent WLR. I've explained what WLR means, win-loss ratio. In 10 trades, you win 2, lose 8. 80% accuracy or 70% or 75. That's the pass mark with the right risk management. So there's any bots too that can also help you copy trades from expert traders and implement it on your own trade. So it basically depends on the system you are trading with the bots. And like I said, my opinion, I would not approve anyone trading with bots. I prefer you do it yourself. So you get to understand how it is done yourself. And if you try out bots and it works for you over a time, apply good risk management and keep using it. So identify what actually really works for you. In as much I'm not a fan, I will not also discourage someone from doing it.
All right, that was amazing. Thank you so much for that. So thank you once again for honoring our invitation. Thank you so much for the value you have shared with us so far. We really do appreciate. Thank you so much, sir.
Yeah, it's
So,
my pleasure.
all right. So we've come to the end of today's session. And guys, so if you like to connect with our today's speaker, you can connect with him on Facebook, on Twitter. Are you on LinkedIn?
Yes, I'm on LinkedIn.
Okay, so his Twitter
Uh,
handle is Grace. Is it Grace
yeah,
Hills?
yeah, Hilary Azubuike. That's the name on the as on the flyer. Hilary Azubuike
Oh,
on LinkedIn. Just search Cryptohills on Google. It just shows you my profile.
all right. So if you want to connect with our speaker, you can connect with him by searching for his name on Google, and you are going to see everything you need to know about it and how to be able to get to him. So, guys, if you are yet to subscribe to this YouTube channel, please do well to do so, as we are going to be bringing you on a weekly basis helpful tips that will help you to remain profitable in the cryptocurrency market. So, thank you so much for joining us today. Goodbye and have a lovely weekend.
Yeah.